Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. Today will be one of, if not the busiest closes of the year. Not only is it the end of the quarter, but it is the annual Russell Rebalancing. So around 4 times the typical volume that we usually see on the close is what we'll see on today's close. So a lot to get to regarding that and the potential fireworks at 4 o'clock or just beforehand. We also have the after hours action in the banks thanks to those stress test results. We have news from Boeing, news from Apple, a lot on the radar today. Our guest, Gil Morales, from the author of the Gilmo Report and managing director of MoKa Investors. He will join us at 8:35 here, but let's just jump right in. Joel, what is the word here overnight?
We got some green on the screen here thanks to the banks. S&P futures are trading up 6 3/4 points at 2937.75. Pre-market high 39.75. That's right up there with Wednesday's high. If we could press through there, folks, I do not have much resistance in 2940 handle. So we'll see what happens if we could pierce 2939.75 on the downside. Pre-market low 29.30. That's right near the closing price of 29.31. So good support there, good $8 away from it. So that's looking good. Crude up 13 cents at 59.56. Is it a triple top or not? We will find out soon. You have 3 highs in that same area. Just call it just under $60. Gold on the rebound up 490 at 1460.90. Silver into green by 1.6 cents at 15.30. And Bitcoin, if it doesn't move $1,000, I don't want to talk about it. The futures are up $1,000.40 at 12,135. Triple D. So much for summer quiet markets, huh?
Yeah, news, and more news here today. We've just got a ton of stuff going on here. I don't even know where to start. I mean, the probably should start with the stress test because those were crazy, but we got the Russell Rebalance happening here today. That's going to obviously really significant action at the close. We also have the end of the quarter. It is a rare event for the end of the quarter and the Russell Rebalance to fall on the same day. Russell Rebalance is always on the 4th Friday of the month, where the end of the quarter is obviously on the last day of the month. The only day that is possible, if I'm doing the math correctly, is the 28th. So when the Friday falls on the 28th, because obviously it fell on the 27th, you'd still have a Monday the 30th. So this is going to be some fireworks because not only are you going to have all the indexers on the Russell Rebalance trading, you're also going to have the end of the quarter traders as well. Window dressing, all kinds of fun things going to go on. So expect some major volatility at the close.
All right, well, let's
you had some stats before we go. You had some stats about the Russell Rebalance.
I did. Courtesy of the Wall Street Journal yesterday in their newsletter that I read every day. Just typical volume on the NYSE at the closing volume. We'll call it around 14. This is last year, around $14 billion of volume. Last year on the Russell Rebalance Day, about $59 billion of volume. So about 4 times the typical daily volume is what we'll see today at around the close.
So crazy movement here. Let's go to the banks. That's where the individual movement was last night at 4:30. There was some major, and I mean major, fireworks going on. Spencer had let everyone know on the pre-market show that it was indeed the stress test results here. Thank you for reminding me that, Spencer. I was ready. I knew it was coming at 4:30. I was kind of ready. Came out the initial headline right at 4:30. It says all 18 banks passed. That's good news. So I'm still not making a trade at that point in time. But then they start popping in with the buybacks and the dividend hikes. First major one was JP Morgan to do that. I was like, this is going to be obviously a big thing if they're going to start, and I think they did this last time too. So they obviously got their capital plans approved and they're doing buybacks and dividend hikes. So JP Morgan closed 108.84. I was able to get some 109 right around 109.20. I had to pay up a little bit. I wasn't as fast as the first guy, but I was probably the second or third in there. And it just ripped. It ripped all the way up 110, 110.50. I got out last night in the 110 handle. It's obviously kissed up to 111. We know, Alex, I have that FIFO problem, so first in, first out. So I participated in that one. The second one comes out. I can't remember who the second one was. I think it was a smaller one, a smaller company, a smaller bank. And then I'm like, and they come out with a buyback dividend raise. And I was like, I go to myself, I see what's going on. They're all going to do buybacks and dividend raises. So only 2 are out at this time. So at this point in time, I'm like, okay, I'm trying to pick up whatever banks I can, just anticipating that they're all going to do it. So I was able to buy some Wells Fargo, was able to buy some Goldman Sachs. Basically, actually, Goldman was down at that time still. Wells Fargo was able to buy. And this is, and Josh Brown, if you're listening, this is how you trade headlines, buddy. And you can do it. And then I was like, you know what? Screw it. There's not a lot of liquidity. There's not a lot of offers out there. Like Morgan Stanley had nothing. Citigroup really had nothing. Bank of America had some, but it was people were already anticipating moving up. I'm like, screw it. I'm going the XLF. So then I just go, and XLF was basically unchanged. So I bought a bunch of XLF. I went and bought KRE. So I'm just going and trying to buy anything bank that I can possibly buy. And then I'm trying to sit back and I'm saying to myself, Alex, if you're listening, I'm trying to say, stop being FIFO. Let it, try not to sell right away. Try not to sell right away. And as they go up, Wells Fargo comes out, it starts ripping up 50, 60 cents. My Goldman Sachs rips up $3. And I'm like, okay, I'm going to start locking in some profits. So anyways, I still have the FIFO problem where I was probably one of the first out, but I'm out of the majority of banks here now already. So if you're coming in here now and you're trading these things now, you were late to the party. The money was to be made last night at 4:30 on those stress test results.
But with 2 headlines to know, though. First is the 4:30 headline.
Yes.
All 18 for 18, they all passed.
Whoever's buying on that headline, genius. I hesitated there.
Credit Suisse was the only one they passed, but they have to show another. I forget what the headline was. I had it up with me, but Credit Suisse passed, and they're going to have to provide like some more data. Yeah, they passed conditional approval. The Fed gave conditional approval, but Credit Suisse must address weakness in their capital planning. But they still passed. So 18 for 18, that's the first headline. Yeah. Second headline, which we didn't know when it happened, but you're right, it did happen last year. They're all going to return money to shareholders. So they're all going to raise their dividend, and they're all going to buy back stock. And basically, that's what happened. They all did that. Yeah.
I remembered that. I started to remember that. After the second one to the buyback, I was like, I remember this. They all do the buybacks. They're probably going to do it again. So I'm actually buying stocks before they announce any news. So you're actually in that point in time getting ahead of the algos because the algos are all programmed to buy on the actual news, right? So, on something like Goldman Sachs, I'm anticipating now that they're going to do the same thing because I just saw 2 other banks do the same thing and they're probably all going to start doing it. So I'm anticipating ahead of it. And other traders were doing it as well. But, so you're coming in and you're buying it. And then obviously the announcement comes and then the algos rip it higher. So in this case, in this instance, if you were, thinking quickly, the human being could get ahead of the algo. There's not a lot of opportunities like that, guys, but there was last night because the algo is waiting till the individual headline on each individual stock to run because that's how they're programmed.
The algo can't go before the headline.
No, they can't go before the headline, right. But you could totally see after the second one, I'm like, oh, there's going to be probably 16 more headlines of buybacks and dividend raises here. So, or at least, a few more banks anyways from the big guns. So anybody who was anticipating that obviously made some money last night. So headline trading was done by humans very efficiently last night. I'm sure I'm not the only one who was doing it. So congratulations to whoever else was buying on those 4:30 headlines.
Yeah. So lower interest rates and not bad for banks and stuff. We forget all about all that stuff, right?
At least temporarily. Like, what does this mean now? So, okay, if you're, an intraday trader and you're waiting, the price discovery has already happened. These things have already went up. The easy money's already been made. It's difficult to say. Could these things potentially give it back? I mean, they've had some pretty good reps. They've had some pretty good reps on news. They've been running here. I don't know. The trade's over for me. So, it was in and out. The trade was last night. So now you're looking and you're like, okay, well, what do I do with my Goldman Sachs now? 203.50. I mean, that information is priced in. Yeah, it's nice we're getting a buyback. Yeah, it's nice we're getting a little dividend raise here. But the easy money was made last night. I have no idea where it goes from here. If they in some instances, you actually saw, I believe, in the last year that some of them give these gains back. Are they going to give it back immediately? I don't know. There's no trade really for me here though because the price discovery already happened. happened last night.
Let's look to follow through the pre-market highs. I think that would be your biggest indicator. I mean, Bank America up 2.66%, up 75 cents. Bumping into $29. I mean, not only is it going to have to take out the size at 29, it's going to have to take out the size all the way from 28, 21, all the way up there. So you're going to need some monster buyers on the open and get it over 29 and keep on running. So that's a big move. It closed at 28, 21. I won't go through all the other individual ones, but just keep an eye on your pre-market highs. See if that or after hours when it was made. See if it coincides with a daily high. And if you have the open book, try and see where the size is. But Bank America up 73 cents on 349,000. Probably traded a lot last night, but it'd take a lot of stock to open this thing up.
Let's go look at the buck at 29. So here, if you're coming in now, it's like you're buying somebody else's profits. You're buying from the guy who bought it at 430 last night. He's selling it to you. So, I mean, is there more money potential in there? Maybe, but the easy money was made. And yes, you're right, Joel. $29, 160,000 shares. Now it's already traded 349. So can it chew through that? Sure it can, but that could be a little bit of a stumbling block.
What about everything lower in the book, Dennis?
Well, that's it. There's all kinds of stuff lower in the book too, and that's what people don't understand too. They think, oh, it's already chewed through that because it's 28.94 bid. New York liquidity doesn't come active till 9:30. So I can see 26,000 at 28.40, 16,000 28.47, 33,000 28.50, and we're early in the morning. We're still an hour 20 before, so there could be more orders that come in. That's 60,000 shares right there. So is it going to chew through all that? Probably. Is it going through 29? That's a tougher level. So you're at 28.95 here right now. You're coming in buying it here. I think you're potentially on the wrong side of the trade. Potentially. I'm not shorting it because it's not that clean of a setup to say, oh, I just want to show off 29.
Yep.
It's on such good news. But if I was long, I would be selling hand over fist in the 28.
What if you picked up the weekly 28.5s for 7 cents?
I'd be selling the stock short against the weekly.
Yep.
So, and this is what we talk about all the time too. So many people buy options and they wait till the options open to trade out of their options. You can sell the stock against your options. Use your option for what it's for. It gives you that opportunity to buy it back. So you got the 28.50 weeklies. You can short 28.92 here right now. Lock in 42 cents. If it gives it back, if it goes and gives it all back and starts going through 28.50, not only have you locked in the 42 cents, you start making more money because you don't have to execute those. So I love that trade. If you're long 28s or 28.50s here, it's not bad. I mean, if you think it's going to 29 or 30 bucks here today, could it do it? Yeah, I mean, the stocks can do anything. But we've already had, a long time of price discovery here. Is it going to start ripping here at 9:30? I don't think so. I think, you've got the majority of players who wanted to be in or out probably have already been trading it after hours quite a bit. The main movement has already happened.
All right, we mentioned right before Dennis or Spencer was starting the show, you mentioned that chips took off on something. I see Micron trading up a little bit. Was there any specific chip news, or was just some 8 o'clock buyers there?
They're just ripping, man. Micron's up another $1.78. Let's talk about these chips here. MU earnings report in the gutter. I'm long the stock in my long-term portfolio. We know that. $32.61. There was a close, I believe, or right around there. Come out the report where rips for day one, rips for day two, really ripping on day three. Now it feels overdone. I mean, again, the big psychological $40 level here. Again, if you're coming here now, you are late to the party.
Just got a little bounce, 39.80, trying to hit the highs of the pre-market session. What do we have here on the dailies? Boy, we're already up near 40. I guess last time we traded over $40 was on May 7th. May 8th, you had a 40.50 high. That's within range. But you're opening into your May 9th high. So let's see what happens. Be careful on this one. If you get that extra 30, 40 cent bump and you get over 40, and then all of a sudden there's nowhere to go at like 40.05, 40.10, 40.10. Then you can come back down. But right now it looks strong. It looks bid. A lot of, Micron's not as thick as your Bank America. So you're going to have.
I bet 40 is loaded up, though.
Yeah. You think so?
I think so. It's not a New York stock, but I bet you. Think about the big psychological have come back. I think 40, it just got up there, too. I mean, that's one thing, guys. Those whole numbers, it sounds so simple, but it works. I mean, when you have stock running $2 in the morning, it comes to a big whole number. it's off in the turning point there, and it did turn already once in the pre-market there. So I would think 40 is the first hurdle for this stock, the next hurdle. And I don't know. It's run so far, so fast. You think eventually it's got to cool off. This kind of feels like upside capitulation a little bit this morning. We're seeing a lot of the other chips run too. I mean, Western Digital catches the underweight rating there from, who was it, CS or Canner? Or, I can't remember.
Is that yesterday you talked about?
Yeah, and it shrugs it off and goes straight up.
Wedbush.
Shrugs it off, goes straight up another $1.50. Now it's up another $1.50. It had some bad news yesterday too with that outage that they had. They're shrugging that off too. I mean, they're just full on, just buy at any, regardless of any, not even thinking about it. I think, and I'm long West Digital too, but if you're in these things for trades, I think this is the time to ring the register in both Micron and Western Digital. These are in my long-term portfolio. I haven't decided. Western Digital is kind of like half of my long-term portfolio. It ran. I might actually ring the register on that one. Micron will probably hold on.
You took some, yeah. No, I mean,
I never took any heat on Western Digital. That was a Sean Udall one. I bought it $36. I never took any heat. It ran to 55. I sold most of it in the high 40s. I was probably out early. FIFO again. And it ran to 55. I kept like a small position on just for fun, all the way back down to watch all my losses gone. Now I get half of the gains back. I think I'm in the register in the Western Digital.
All right. Real quickly here, Gary N63 puts in Needham upgraded Micron to a buy with a $50 price target. I'm not sure what time that happened.
Is that
Micron? He's just perhaps the reason for the pop.
Oh, yeah, that sounds right.
Yep. Interesting stock here. I just want to talk about from yesterday. Howard Hughes Corp put themselves into play, and it got a nice run up, trading up to 131 and a quarter. I'm sorry. Is there any?
What's the symbol?
HHC.
Howard, we're just supposed to know what Howard Hughes is, because that's not a stock that I trade every day.
Howard Hughes Corporation.
I've never traded that before, I don't think.
All right.
Okay.
Well,
then they should.
It's not a widely traded stock.
Yeah, there should be delisted if you haven't traded it before. We should just.
I'm just saying.
It's in play. Someone asked about it.
Ticker.
HHC Henry Charles.
Perfect. Charles. Hey, shout out to Charles there. Benzinga.
Yep.
I know. I did see this headline go by yesterday. I think Jeremy Newsom actually messaged me with it too. Crazy move yesterday. What, they put themselves for sale or something? What was the headline?
Yep. I'd say the only thing with this is you better hear a price. You better hear a sale. You better hear, a potential buyer, because if this goes back to the area of origin, that was $95. Perfect timing, right on the low of the move. But I just wanted to just alert to people to the activity in that, and just
if I was in this, there would be some major register ringing going on. That's crazy move. Gift. In my opinion, that's a gift.
I agree on that one. And did you see that Rite Aid yesterday? I mean, is that the most ridiculous move you've ever seen?
They have well, that's just it. Short squeeze going on in Amazon. Oh, we're going to partner with Amazon. Or what was the headline? Was it partner?
Yeah. What was that? What time did that come out afterwards? Because I kind of looked at it.
What was the actual headline? I heard it's something with Amazon.
Yeah, I don't know what time it was. It was after the open. I don't know here.
Can you read the headline?
Let me try to find the exact time.
It says Amazon partnership will create a stronger customer experience.
Hold on.
Partnership with Amazon, where Amazon shoppers can pick up packages at designated Rite Aid stores.
Gift, in my opinion, too. I don't think it gets over $10. $9.69 the high yesterday. Gets anywhere to the nines. I almost think it's a good short.
Okay.
Don't like it at all. Not from the long side. Didn't like it yesterday. Didn't like it the day before. Didn't like it 5 years ago. Not going to start liking it because I got a partnership with Amazon here. Fine, if you got it, congratulations. If you bought it $6 and last, if you bought it over a month ago, you're probably down money though. So I think this is just a gift. Stocks again. I'm going to say it. Stocks and heavy downtrends, and when they get these little rip your face off rallies on positive headlines, they seem to get eventually faded. I took a lot of heat for Bed Bath & Beyond, a lot of heat, saying that I thought that the pop was a fade. This was back in March when the stock went from $13.50 up to $17, $18. I didn't put the trade on. If I would have put it on, I probably would have got shaken out because the thing did break out for a few days after that. But what I said on the show that day was, I think when I look at the 6 months from now, it's going to be lower. It's going to give it all back. And not only gave it all back, it gave it all back in 2 months. So
And
it's
just like you talk about a smooth ride down on the escalator there.
Oh, it's smooth all the way down. That's why you buy good companies. Don't buy bad companies on potential headlines or, positive headlines. You sell bad companies on good headlines. Buy good companies on bad headlines. Sell.
Let me write that down.
Write that down. Sell bad companies on good headlines. I think you make money with that.
All right. What there was an earnings report was Nike last night?
Yes, it was.
And it's not moving a lot, is it?
It did. It really got hit.
Ooh,
and then rallied all the way back. I think it might have went under $80.
It did.
ETFD on that one.
79.56. What are the numbers, Spence?
62 cents versus a 66-cent estimate on the EPS. Sales of 10.18 versus 10.17 billion dollars. So more or less in line on the Q4 report. And they talked about China on the call, but nothing big aside of that. So a fine report.
Tough looking chart here. I mean, throw out that pre-market low here at 79.58, and we're trading a little bit red here. I would just keep $82. I know it's 32 cents away from here. Several lows in the 82 handle. I'd say 82 holds. You're good to go north. I'd keep an eye on the pair of highs at 83.75. So opening into resistance, opening into those two highs. If you're looking for a big breakout, I'd like to see it get over $84. But those pair of highs,
84 is big. Let's go look at the book.
Sure, because something matters like this. I mean, with a stock.
Yeah, oh yeah, the book matters in this one because the volume isn't that crazy. When you get volume going 1 million shares, book's kind of meaningless. Get volume 57,000 shares this morning. I mean, it could be issues. $88. That's a long ways away. 68,000 shares. We're just giving you potential numbers. And then 90. 230,000 shares up at 90. It is not coincidental, guys, that thing topped out at 90 on the kisser on the 18th. Why it couldn't chew through 230,000?
That's a lot of stock.
Maybe it's a lot of stock. So if this, for whatever reason, we always live, just in hypothetical situations. If this goes into a rally mode, I don't know if it's going to. It's been sitting here. It's already traded last night lots. It sold off, came back to flat. I don't think it's going to. If it ever went into rally mode, your first hurdle will be 88. 90 is just absolutely huge. So I love the short up at 90, but I mean, you're $83 here right now, so you're probably a long ways off. But these things can get wild sometimes on earnings. We have a lot of potential volatility with the end of the quarter as well. I don't think, I'm not playing it long. I'm not playing it short. I'm not playing it at all.
Kind of in the middle of
nowhere.
Got
up to $88 or $90 and the upper 89s, I'd short it, but I don't think it's getting there.
Yeah, it's kind of sloppy, kind of in the middle of the nowhere here after getting over 86, but keeping an eye at 82 Nike on the downside.
So let's talk about this rebalancing that's happening after the close today. So the preliminary list, which came out a few weeks ago, is usually going to be the list that you can go off of. I'll put the link to the to where you can find the list in the chats right now. But about 166 projected additions, 157 projected deletions from the Russell indexes. Additions including Spotify, Lyft, Uber. Deletions including NXPI, Pure One Imports. So I'll put the list in the chat right now. But the entire point is, and Dennis said he was doing some research prior to our show yesterday, at least. There's going to be some fireworks. A lot of money will have to change hands at the close today. Institutional money, institutional buying and selling. So I just put the list or the link in the chat there. But Dennis,
I'll click your link to see what you've got.
That's just a link where you can download the
download the ads,
PDF.
download the deletes. When you go there, you'll see, you can see the 3,000 additions and the Russell 3,000 deletions. I mean, you can breaks it down. You can look at the microcap. You can look at that. For the most part, what traditionally has happened over the last, whatever, many years, when I first started trading, is you typically saw the ads start to get bought ahead of going into the index and the deletes get sold going ahead of the index. This trade has not happened like that in the last 3 or 4 years. It becomes crowded. Sometimes it goes the complete other way. I've seen instances where somebody's, where you think the ads are going to go up and you buy all the ads and they go straight down. It is very unpredictable now. And things have changed, and I mean it can be game too, right? So algos are all these people are playing these things from the ad, we're going to take it the other way. So anything that's very predictable like that can be gamed easily. So a lot of funky things happen on the Russell. All I can promise you is that there will be significant volatility in these names. The direction is still to be determined. So don't just automatically assume that all the ads are going to go up and all the deletes are going to go down, because sometimes the exact opposite occurs. Just be cautious if you're trading it. Assumptions, don't guilty until proven innocent is what I'll say on the Russell Rebalance. I've had, some really good Russell Rebalances, and I've had some really bad ones as well. And I've learned the hard way, that you just can't do. Simple Simon sometimes works. Like last night with the stress test stuff. On this stuff, it often doesn't.
Will you go way out, like let's say 345, get the imbalances, see where they are? And I mean, yeah. I know you're not going to be. I know you're not going to be like playing close to the price at that time and then trying to gauge your reaction. And correct me if I'm wrong, but if a stock's trading at 37, they're being added, you might try and sell it at like 42. Or things like that. I mean,
yeah, well, and this is one way that I've always played it, is selling into the gap in the closing print. So you get a stock that's going to gap up into the close, I might fade that short. If you get a stock that's gapping down into the close, I might buy that long. So fading the closing gaps is one safer way that has traditionally worked. Nothing always going to work though, so just be careful. I mean, they could pull the rug out from under us on that one too. But that one has been the safer way to play it, in my opinion. I have made money usually fading the closing gaps. I used to anticipate and jump ahead, and say, okay, well, I think this is getting added. I'm going to buy these and then sell it on the close. That trade worked 10 years ago. It doesn't work as well now. So that's just all I'm warning you. If you're coming here now, there's some really wicked action here. But these names here, write these ones down if you want some action, because there will be some major players on the close on these stocks.
Spinner also noting that Beyond Meat will be added, so expect extra volatility in that guy today.
Yeah, it'll be wild on the close. So if you're trading Beyond Meat just randomly, you need to first have the imbalance feed up so you know what's going on, because it's going to be changing continuously there too. I mean, after you get to 920, it's a NASDAQ stock, so it's going to come out at 350 as opposed to 345. Actually, they're all 350 now. So I forgot New York Stock Exchange changed it. I'm so used to saying 345, but they changed it back, I believe, in April. They're all 350 now. So NASDAQ and New York Stock Exchange closing balances come out at 350. I mean, there's services that give you early data too on the big names. They don't give it to you on the little names. They give it to you on the big names. Rosenblatt has an early imbalance data service that they're taking the data from the floor brokers down the floor. Great service. I used to use it quite a bit. But the only thing is, it's only usually on the big names is the Rosenblatt service. On these little ones, there's not that much information until the public dissemination comes out at 350.
Okay.
And
all right.
I was going to ask when this is going to all go down. I would assume in the final 5 or 10 minutes. Is that a safe?
The close will be the real fireworks. So the closing print. So you're going to see movement into the close. Typically, the way they start trending after 350 is the way that they usually they don't whipsaw as much. If they're trending up going into 350 and that trend continues after 350 when the imbalance data comes out, it doesn't wickedly reverse on it. Then usually that trend will continue into the close, and then the fade and the close is the play. But these things are funny, man. Things happen, and and just when you think you've got it all figured out, sometimes some other things happen too. So nothing is an exact science with trading. I think everybody realizes this. We always live just in the probabilities, not in the absolutes as traders. But you try to find edges where you can. So. That's what we try to do here on the show. We're trying to give you little edges from our experience and trying to use whatever quantitative analysis we can to try to give you better trading ideas.
You get your imbalances through Ready, and who'd you say? Someone's asking about
IP has it. Interactive Brokers has it.
And also, doesn't Rosenblatt offer it as well?
Rosenblatt has a product. So if you don't get in, if you're a retail broker and they don't have imbalance, you can go to Rosenblatt. Man, they should give me kickbacks or something. That Rosenblatt.
Just ask your broker. Just ask your broker. Ask your broker.
Ask your broker. I want the closing imbalance feed. Probably if you call, they probably won't know what you're talking about, because most of these guys that are answering the phone don't know what that is. Not on balance, People will say, oh yeah, on balance. No, you want the imbalance feed, the publicly disseminated feed. Send them like Google NYSE imbalances. Send them that link and say, hey, this is what I want. This is, what, I need this information. And if your broker doesn't have it, yell at them a bit. Tell them, what are you doing? Interactive Brokers has this information. Go get it. So it's, obviously, there's a cost involved maybe for your broker to get access to it, but there's no cost, for using it through Ready or Interactive Brokers. Your broker doesn't have this information, you're missing out on a lot of valuable information. It's ridiculous, in my opinion, that they don't all have it. Because your retail brokers can get it. I know IB has it.
And if your broker is Robinhood, don't bother calling. I'm just gonna say that.
I mean,
who calls their broker anyway? Yeah.
Well, I call to complain. That's it. When I call, it's nothing nice. I try to be, but I always try to be nice on the phone when you complain. Complain in a nice way. Don't yell at them. Just say, "Oh, we'd like to get this in." So always be nice. Nice people finish first.
All right, real quick here before we go to our guest. Twitter setup here. We filled the gap from earnings. So if you think the earnings trend will continue here, you do have the gap fill. You got a bunch of lows in the same area here, just over the last few days. So we could talk to Gil Morales about that, but it could be some big boys stepping up here. 1, 2, 3, 4, 5 lows within a 40-cent range. The low of the move was that spike down to 34.04. You have it in, you have an out, you just don't have a catalyst. So that's the only thing
Which stock you talking now?
Twitter.
Oh, better.
Yeah, what do you think? We haven't.
I'm out. I sold mine. I sold it on the one spike there and got out. It's leak at 34, line in the sand. Absolutely, from a swing trader perspective. Bull's still in control as long as 34 holds. If 34 goes, this thing could be at $30. So you do not want 34 to go. And by go, we mean don't go 33.85 and think, okay, now it's going straight to 30. Gets back up over 34. That means that was a fake down, not a breakdown. So how do you know it's a fake down? When it doesn't keep going down. So, that's the best thing to wait. So $34 the line in the sand for me. If I was long Twitter, I would not want to own it below 34.
And Mario's pointing out here, Uber, first close over 45. Is that... Yeah. Is that significant? It's being added to, right? It's being added.
I'd say it's significant.
Yeah, I would too. I would also put a lot of emphasis on that 45.75. Actually, you have a couple highs right there. 45.75, 45.66, and 45.67. So you chew through that, baby. There is absolutely no resistance in sight here. Got up there off the IPO, failed, got up there again, failed, but made a much higher low. Now we're knocking on the door here for the third time. So maybe Uber finally going to have a little breakout. And I also noticed Lyft had a line in the sand here. Look at tight ranges and popped over 65 yesterday. I guess the highs aren't as close to each other as I thought, but just kind of like a little consolidation. This one's been going up a little bit more tame, but I don't think I'd want to be short this one. It looks like getting ready to go.
Both of these stocks look kind of gearing up to go. Now, I mean, is it going to be, we're going to Gil Morales in a minute. He says, the breakouts have been fades here lately. So maybe we'll get his thoughts maybe on Uber and Lyft here in 30 seconds. But they both kind of look like they're itch and go. I mean, you have a catalyst. Are they both getting added today?
Yes.
I didn't notice.
Yes, they are.
Yeah, so there you go. So that could be a catalyst there too. One thing to consider, and I just think about this on Beyond Me, and then we'll go get Gil Morales. But it's high little rally here. It's up another $5 here today. It's getting added in there. I mean, this could be the day where you get that second opportunity to get the hell out. I think a lot of times these days on these Russell Rebalances, stocks will set highs or lows that will not be breached for the entire year. A lot of times you see the 52-week highs or the 52-week lows, or at least 3-month highs or 3-month lows on certain stocks, and a lot of times they reverse the other way. These are traditionally often turning points for certain stocks. So keep that in mind. I believe that the Beyond Meat all-time high is in. I don't think we're getting back to 201. I know it's showing some life here again. I think it's over though. I think that was the high. That's my opinion.
Just real quick, Constellation Brands here.
Earnings.
Trading sharply higher here. You want to do the earnings real quick on that, and I'll just.
Let's just grab Gil because
Okay.
I've got Gil with us. Gil Morales is with us now. He is the author of the Gilmo Report, managing director of MoKa Investors at Gilmo Report on Twitter. Gil, good morning.
Good morning. How you guys doing?
We're doing well. How are you?
Pretty well at 5:30 in the morning. So
I know, Gil. I always feel bad. I'm like, God, because we talk about your trading techniques. We talk about institutions and stuff, and I'm like, I want to get Gil on, but I feel bad because it's like 5:30, and I know it's 5:30 in the morning for you. I really appreciate you coming on.
Well, I get up about an hour before now, but one of the reasons you're not going to see me on the camera is that I'm not looking too good at 5:30 in the morning, so I haven't gussied myself up, shall we say, and made myself presentable, which I usually don't until the close. So, anyways.
Okay, all right. Maybe we'll start doing a close with you, or a show with you after the close sometime. But so let's just talk institutional order flow here. Kind of quiet this week. We had the Quad Witch last week, and then you had the G20 meeting. So it seems like the big boys are a little bit on the sidelines here. Just give us your overall market perspective heading into the Russell rebalancing too.
Well, the first thing I'd say is I'm not really sure who the big boys are these days. I tend to think this is a market driven mostly by machines. And I recently posted a graphic in a presentation I made at the Pacific Northwest Trading Conference up in Vancouver, British Columbia, that showed the participation of various groups in this market since 2010. And it shows institutions have diminished while you've had non-financial corporates have become the dominant force. And I don't know exactly what that is. I assume some of that is corporate buybacks, which have driven a lot of this market. And I don't know if that includes, high frequency trading funds or entities like that. So I think a lot of the movement these days is driven by machines. And today is a great example of how much emphasis is being placed on what is now mostly an ETF dominated market. So the ETFs are a big force in the market, and everybody's talking about this rebalancing, and it does move stocks. And I got to tell you guys, 10 years ago, I didn't pay attention to this stuff. It's kind of like Fed meetings. Now it's like, how many times did he blink? How many, what did Powell say? What was the word? Was it an is, add the, depends on the definition of what is, it's all this noise. And so you just got to focus on the charts and basically last Friday, I was sitting there doing a live webinar, and I was long in the middle of the webinar, and right smack in the middle of the webinar, I saw things shift on my screen. I just reversed all my positions short. And this included names like Zscaler, Zendesk, and they were all near their highs. And you can go check those charts. They came straight down. Workday, MongoDB, I think that's how you pronounce it. If you guys have a better pronunciation, let me know. But these stocks were all breaking out just a couple 3 days ago, and then they all reversed. And you look at them over the past 3-4 days, they got hammered. So I did pretty well over the last 3-4 days on the short side. Then things got a little bit long in the tooth. I'd say yesterday, maybe even the day before, but now we're bouncing. You've got Micron leading a semiconductor bounce. You've got the oils bouncing off the lows. And another phenomenon I noticed in this market that seems to dominate the action is that the biggest moves in stocks and in groups tend to come from things that are coming off of their lows. You look at the movement in the semiconductors, very sharp. The movement in the oils is very sharp off the lows. Meanwhile, everything near its highs is basing and it's not going anywhere. Another phenomenon is when we sold off, in May, the sharpest move in most stocks occurred off of that low when we made the turn. I think it was on June 1st. You can correct me if I'm wrong there. And then everything gets back to the highs, and then we just kind of funk around. So, and I said funk, F-U-N-K, just so in case it was unclear. This is the market we're dealing with. And to me, it's a swing trader's market. But on the other hand, as somebody who is a nimble trader who is able to watch the market all day long very closely and move with it or dance with it, as I like to say, I think you can take advantage of the volatility. So I don't see any major trends developing here. And that would make things a lot easier. Like I'd say my stock of the year was Roku, and that was a buy down at $29.30 in early January. 9 points later, it's at 39, and what's his face over at Citron Research is saying it's an uninvestable stock. Now the thing, punched through 100. Now it may have topped. But it's that sort of thing, and that's coming off the bottom. You haven't seen those types of moves 2-3 times, to the upside in many stocks in this market. I think Shopify has been probably the biggest mover, but everything is coming off the bottom, and so you have to know how to buy off the bottom. Now, I noticed you guys are talking about Twitter.
Yeah, let's go to that.
Ago. Well, I look at it this way. I know that was Dennis, right, who was talking about this. Now, 34, you look at 34 as being a level of support, and if it breaks that, then it's probably headed lower. My argument would be that that's a possibility, okay, and that's a traditional way of looking at things. So I'm not going to say that's necessarily wrong, but what I would watch for is if it punches through that 34 low and then it turns back to the upside. Yep. From there, then that is what I call an undercut and rally long setup, and that's derived from Richard Wyckoff's spring formation, where you undercut a low in a pattern. It looks like it's support being broken, so the crowd views it as, okay, support's been broken, we all got to bail out or let's go short, and it fakes out the crowd, and that the thing turns back to the upside. Look at what Twitter did back in early June. It had that massive break to the downside, bounced off the 34 level, came back up through the prior low. I believe that was at 36, 37 in early part of May, or say just around the mid part of May, and it kept going up through that. And so that was a tradable move, for a good couple, 3%, not a lot, but it's a tradable move. And then it peaks out near the prior May highs, the late May highs, and then you roll over, go through the 50-day, you rally into the 50-day, and at that point, that was a short for me, and it came down. Now it's coming down into 34. You're reaching a potential cover point. And it could flip also to a buy situation at that point. So, but this is the market where you have to do things that you would not normally do. In the old days, it was you have a style. I mean, look at the huge break in Twitter, and you go back and look at every stock on that day, which was June 3rd, actually, and you have massive volume breaks. Amazon, Facebook, just go down the list, and that was the bottom. So down big on volume is now a buy signal. Okay, when something breaks out on big volume, that's a sell signal. Look at MongoDB. Just a few days ago, I guess maybe a week or so ago. Let me pull that up so I know what the heck I'm talking about. MongoDB, that was about 2-3 weeks ago. You have a big breakout. They run it up for a couple days. It reverses, and then it tests that high one more time. And then you can short it there, and it comes right back in. So now maybe it's in a viable position here. But again, breakouts go nowhere. And I think these people out there who are pitching people on buying breakouts when a stock hits a peak price that you're determining from a spike way on the left side of the chart, I think they're basically irresponsible in telling people to do this when you can observe that it doesn't work. Yes, sir.
It's the market environment that we're in too, to a certain extent, because I've been trading 20 years. Sometimes you have breakouts working, sometimes you don't. Like, let's just put it in perspective here, and you look at the S&Ps. We've really gone nowhere for 2 years. I mean, we've been chopping around. Right. The fade trade has continuously worked for the last year and a half. So how much of that, I completely agree with you. It's why when I was saying with the Twitter, I said I wouldn't want to own it below 34. But I also said, if it doesn't stay below 34, it gets back up there, then that breakdown becomes a fake down, and you can absolutely catch people too.
Yeah.
So if you are playing it through the 34, you want it to stay through 34. And if it goes up to 34.50, you admit you're wrong at that point. And you turn around and maybe flip the trade and go long because there's that opportunity there. But how much of that is just dictated by the environment that we're currently in? I mean, the last year and a half, really, the fade trade.
A lot of it is.
Yeah.
I mean, you can see it in the indexes because you're just in these big, huge, choppy ranges. So you reach an extreme on the low, and everything reverts to the mean. You head back the other way, and you have to learn to move with that, and also understand the buying techniques. And they're just techniques. Somebody asked me, "Well, has your philosophy changed?" And I'm like, no, my philosophy has not really changed because my whole philosophy is based on what Bill O'Neill taught me, which is that you understand what the market's doing in real time, and figure out how it's actually working, and then you adjust your tactics based on that. And also, I stick to what I look for, thematically big stocks. So like earlier in the year, I thought Roku is a thematically big stock. Recently we were advising people to go long Bitcoin at $4.60 on the GBTC, the Grayscale Bitcoin Trust. That thing went up 3-4 times. So, that's another sort of unorthodox play because it's supposedly a currency. It's not really. To me, it's just it's like a stock in the sense that it attracts attention, like a Beyond Meat. Or even go back and think of the crypto craze we had, a year and a half ago when you had Longfin Financial came public at $5, and it was trading close to 200 or so within a few days.
And now they're all in jail.
And now they're all in jail.
Yeah, exactly. And so, they're all trading vehicles to me. I have no opinions about things. I know a lot of people get up there, oh, Bitcoin's real, oh, Bitcoin's a fraud. Pull the stick out, I say, and just look at it for what it is. It's a tradable vehicle. But, it's these guys on cable financial TV, everybody's got an opinion, right? What I like about you guys is you talk technicals and you know what you're talking about. So I enjoyed listening to the first half of the show. I also heard the discussion on Micron, and that's another one. I don't understand the move on this, but you know what? When money piles into this market in the stocks, they don't care about the fundamentals. They just pile into it. And I think Micron's the same thing. You could have a lot of shorts in there covering, but I mean, they lowered their guidance, and they're going to continue to have pricing pressures. They're going to do 220 a share in 2020. That's next year already, and they're selling at 16, 17 times that number. So before they were at 4 times trailing, everybody's, oh, that's cheap at 4 times, but not really. So now I'm thinking, I think, who was it talking about? It was Dennis talking about 40 as being resistance. That may be the place to watch it. But first they got to run everybody in, so you just kind of let it fly. But it takes every other chip stock with it. And a lot of these things look like garbage. So what's going on? Are they all hoping for some kind of a big deal between Trump and Xi when they have lunch or tea or whatever the heck they're doing this weekend? I don't know. So,
all right, Gil.
Incredible news on the chips.
Gil, any ideas for us today? What's on your radar?
Well, here's what I'm thinking about this market. Okay, you've observed what I would call the cash is trash trade into bonds, into gold, and even into Bitcoin. And I think the realization is that these central banks, they've got nothing left to do except to continue easing, and QE is going to continue for as long as they can keep it going. And so with all the central banks leaning that way, you have this potential for the cash is trash trade to move into stocks. So if we look at some of these IPOs, you guys are talking about Uber. I like, if Uber gets back, it was below the 20-day yesterday, the day before, and it pushes right back up through the 20-day. That's what I call a moving average undercut and rally, an MAUNR. So I got UNRs and I got MAUNRs, and I have an acronymical zoo going. But in any case, that comes back up. It's probably being driven, but I don't know for sure. I'll just go with it. It's probably being driven by the fact that it's being added to the one of the Russell indexes. Which one is it? The 2000? The
3000.
You guys know?
3,000.
3,000. Okay. So, and you pointed out that if it got through resistance area, it could break out and push higher. I like it closer on a pullback. I've liked Lyft for a while. That one's acting well. I'd watch Pinterest too, because Pinterest just pulled an undercut and rally move. Another one that I find very compelling from a thematic standpoint is Slack Technologies, or Work. But that's very, it's just out of the incubator here. And I'm watching this one, whether it tries to hold support in here somewhere, maybe along that would be Wednesday's low, I think. And then you have this low over here at 34.81 from 3 days ago. And I'm watching how this sets up. A lot of times you'll get an IPO will bomb on the first day of trading, come in, undercut, set a low, then rally, then bounce and bounce off of that low, and then rally a little higher, then roll over, and then test that low again and undercut it, and then rally back above. And I think Lyft has done that. And also Lyft had a pocket pivot a few days ago. So that one's acting pretty well. And there's a few of these others, like TradeWeb Markets is actually trying to pull a little undercut and rally off the lows.
Anything on the short side, Gil? Anything on the short side?
I'm watching these chips as they rally. So Micron, I think as Dennis was saying, if it gets to 40, I'd kind of watch it as it approaches. It's just going to get past the 200-day today, so it may run out of gas somewhere up in here. It looks like it did got up close to 40 in pre-open trade just about a half hour ago, and it's starting to roll back. So I'm watching those sorts of things. I'm watching a lot of these clouds because they broke their 20-day moving averages. So look at let me pick even the Z-scaler. Okay, that's rallying back up into the 10-day line. So if it rolled back through the 10-day line, it might become a short. But I'm looking for these things as potential late stage base failures. And it's not really clear right now, but I've got my eye on them. So I think you're in a very nutty environment, very news oriented, it flies this way and that way based on the latest tweets or insinuations from the Trump administration regarding trade, or from Powell and his minions, and so it's just very crazy that way.
Dennis, do you have any other questions? Every week, Dennis says, I have a question for Gil. I need to ask Gil about this. Every week he says that. So do you have any more questions for Gil while we have him on the phone?
Questions for
Gil. You always have questions for Gil.
But just overall, let's take you to the overall market thoughts. We've been, it's such an interesting market, and the technicians, I've often seen them say, oh, the V bottom is rare. Really, we just saw two V bottoms if you look here. And I'm looking back in December, we went all the way down, made the lows, and we rallied it all the way back in April. And then we just had a mini repeat of the same thing back in May and June. First of all, why do you think that is that we see two Vs back to back? And then secondly, where do you think the market goes from here?
Well, that's what I call the flying V formation, and you see it's very common.
Mighty
you see it in stocks. I mean, look at
You
all
got a
these
name
stocks.
for everything, Gil. You got a name. You got a name for everything.
I spend my entire day. Yes, I come up with acronyms and crazy names. And my latest thing is 360-degree approach to the market. So you got to be looking at everything, every way, and something that's a long today could be a short tomorrow. And it's basically a swing traders market with no real trends developing. So that's the way I'm looking at the market. Pretty much a swing traders market. You have to be opportunistic. And like I said before, you have to do things that you wouldn't normally do in the past. So, Dennis, you said you've been trading 20 years. I've been trading 27, going on 28. I've never seen an environment quite like this. And I try to think back, and it is kind of crazy, but you can adjust to it and you can make progress if you understand how the market really works these days. And it is unusual, but I think there are plenty of reasons for it. And I think if you just understand and accept it, you can adapt to it. And that's really the key here. So I do think that you have to watch for a major trend developing potentially from the cash is trash theme that I'm talking about. So, I have you guys might know Fred Richards. I don't know. He's one of Bill O'Neill's childhood friends and a pretty good investor on his own right. But he's an older guy. He's in his 80s now. But Fred used to tell me a while ago, how do you get Dow 30,000? Well, hyperinflation, and so how do you get Dow 50,000? Hyperinflation. So devaluing dollar. And I think if you do see that, you could see stocks benefit from a cash trash type of trade, and then you can just be long in a more
they tell us there is no inflation. All these data, and
that's a pile. That's a pile. And here's how you know, because if you just go back and look at the government has changed the way it calculates inflation, 26 times over the last 20
They take out everything inflationary.
That's what they do. Exactly. And if you go back to the way they calculated inflation in 1980, it would be closer to like 8, 9, 10%. The way they calculated in 1990, closer to 5, 6%. And any moron who goes to the store can tell that things are not getting cheaper or they're not the same price. I have a little basket of goods I get at CVS, which is the local drugstore. And things like shaving cream, deodorant, and those prices have increased on average, 11 to 12% over the last several years. And so it's all about healthcare, and gas, and you name it, tuition, college tuition,
housing,
which I'm paying now, everything. So especially in LA, I mean, it's crazy. I don't understand how anybody who doesn't have money, doesn't have a lot of money survives. I go to the dentist, they clean my teeth. It's $300. Like, whoa.
Yeah, it's crazy. Subway in Canada. I had a sub. I had the steak sub, so I had the good one. But the steak sub and the pop and the chips, it was $15.50. It was like,
no way.
$10.
Well, last night I ate at my favorite Mexican restaurant in Playa del Rey where I live, Senor G's. Great food. And that, they haven't noticed we're raising our prices. They raise everything 10%. So no inflation there, right? It's all
well, no, I have an explanation for that, Gil. Gil, the explanation for that is the avocados are more expensive because of the tariffs. And Dennis, you're eating at Dennis, that's one the exchange rate. First of all, that's the exchange rate, and two, you're eating at the wrong restaurants. But Gil Morales is the managing director of MoKa Investors. He's the author of the Gilmo Report at Gilmo Report on Twitter. One of our favorites. Gil, thanks for the time today, and have a good weekend.
My pleasure. Yeah, you too. Take care, you guys.
Have a good one.
Thanks, Gil.
You too.
All right, 8:54 here. Got about 5 minutes left in today's show. We can do STZ since we kind of talked about it before we brought Gil on, and then never quite got around to that. So, Constellation Brands had earnings this morning. Q1 just EPS $2.20 versus a $2.06 estimate. Sales of 2.09 versus $2.06 billion. So beating the beat. They gave guidance for the fiscal year 20 EPS. That is that was a beat, actually. Mid to high $8 range for the fiscal year 20 EPS.
It's a huge pop. I mean, this stock, the buy was going back when the CEO came on Mad Money and said he bought all that stock. That was back when it was $150. It was straight up. It gave you one more shot in May. And I actually said to myself, it was one on my list that I wanted to buy, but I never pulled the trigger. And, you know, obviously with what Gil was saying as well, they're buying the dip was the play. They're back in May. You're buying anything on May 31st. And for the most part, you're making money. ST Zebra now up at 202. So now you're coming in. You're kind of like late to the party. And if you're playing the fade trades, I mean, you get 205, 210. You get all kinds of this where all the overhead supply from April's going to come in here. So I don't know. It's hard to come in here and chase this up 15 points when we know it's been a contrarian trading environment, really for everything for the last couple of years.
I'm looking at the pre-market high, and we're still pretty close to that. The pre-market high is 204 even. So, man, if you get through that, it's really important to get through that. Then you were talking about some April highs. I'm looking in the middle of May. And man, oh man, there's a quad top at, let's call it 207.40 if you want another target there on the upside. But I'm looking for like this week and a half, 2 weeks. It made highs, between like 205 and 208. So splitting the hairs there. I just going up here after, being in the trough. I just think, boy, oh boy, if you want some targets above 204, then man, 206 and a half, 207, I think would be a great place to ring the register. If you're long, not sure about short, being in rocket mode, but look at those daily highs. You'll see what I'm talking about.
A few minutes left in our show. We didn't even talk about Apple. Jony Ives leaving. I guess their chief designer departing the company is worth about 1%, since that's what it was down last I had checked. Which
the market gave him a 1% worth.
Right, it gave him $9 billion worth. So that happened. We didn't even get there. We can do that. There's ratings
it got
today.
Hit last night on that. It's come off those lows here now. I mean, this is a stock again. Hey, going right to Gil said, you had a little breakout over 200. You've tried to sneak your head up there a few times here. Is it failing around 200? Could be.
I thought it was until the close yesterday when I just thought that the move, they took it up 5 stakes over them buying an autonomous vehicle company. I thought that was a little bit overdone, but yesterday was kind of stubborn, so should have given myself a little bit more time on this.
But if you're coming in here now, it was $170 in June. Now you're buying.
I know, I was shorting it.
I mean, that's just it. It's been a contrary. Gil hit the nail on the head. This has been a contrarian market where you've seen, it's been paid more to buy the dips and sell the rips. Really, from a swing trading perspective, that is what has been paying. It hasn't paid to buy the breakouts. It hasn't been paying to short the breakdowns. It's been more of a play that to fade the overall moves. They go for a while, so they are sustained. But, when you get Apple's run $30 in the month of June, is a pretty good month. So, up almost 20% in the month of June. I mean, if you're coming in now, you're kind of doing it backwards.
All right.
Ratings. Yeah, let's do ratings. There are a few ones I want to mention. First of all, Consumer Edge, which is a smaller firm, initiated Canopy, Kronos, and Tilray this morning. Tilray got an overweight. Kronos and Canopy got a neutral, which we know we don't care about, but these stocks are very sensitive to ratings. So I would keep Tilray on your radar right now. I don't know what it's doing today. So I wanted to mention that first and foremost. As far as upgrades today, we have an upgrade from AutoZone and Oppenheimer to outperform. Procter & Gamble upgraded Goldman Sachs to buy. They gave it a $114 price target. KB Homes upgraded Raymond James after their earnings report. As far as downgrades, let's see. Oh, you know what? Actually, before we get to downgrades, initiations, I mentioned the cannabis note from Consumer Edge. Deutsche Bank also had a note this morning on some restaurants initiating BJ's and Bloomin' Brands at a buy, and Dine Equity also caught a buy. DIN, the rest of them got neutral. Dave & Buster's, Texas Roadhouse, Cheesecake Factory, they all got neutrals. Downgrades today. Wingstop downgraded Stevens, and Darter Restaurants both downgraded Stevens to neutral here. And Biogen downgraded Piper Jaffray neutral. I don't know if we that's interesting. And what else did I see? That's pretty much it as far as downgrades are concerned. Not too many. Live Nation, LYV downgraded Citigroup to sell. So I just run through like 20 tickers, but those are the big ones that I'm seeing today. Again, Tilray, we know these stocks are sensitive to initiations. There is not that much coverage. I don't know if we talked about the Procter & Gamble note before this show or during the show, but that buy at Goldman Sachs is very interesting, and the note from Deutsche Bank on the food on restaurants is interesting as well. So, any of those strike your fancy?
I mean,
that's a lot of them.
Whatever, if you want to take one of the ratings, we know when the ratings gets positive, it usually go up here. Procter & Gamble getting a nice lift off the Goldman, but again, it's a consumer staple stock, so don't expect 3-4% moves off these. It's a pretty good move, 1.3%.
And also, speaking of Goldman, I put this in the chat earlier. Dave Solomon gave an interview to a French newspaper where he had said they were looking into creating their own cryptocurrency, and that was sometime on Friday in France. I don't know if the stock has moved much off that headline, but we know that the banks are all looking into this, so something to keep on your radar. I guess we're not peak Bitcoin bubble when those headlines aren't causing massive moves, which I guess is a good thing. So
G20, I guess that's the only other thing to mention. I don't think we mentioned it through the entire show. So could be some fireworks it's Sunday night, depending on what comes out of those discussions, deal or no deal. Who knows what's going to come of that. It's a binary event, and we'll find out. We'll find out what happens. But great week on the show, Spencer. I just want to tell you, I thought you did a fantastic job this week, despite we had a few technical difficulties, but great job. I really felt we had a great shows this week.
Great show in light of the fact that I left a part of ours in New York City, and it's in the mail, but it's coming. So that's why we're not on my usual headset here. But I appreciate that, Joel. That's it for us. Thank you to Gil Morales. Thanks to all of you in our chats. Please remember, all the information on our show is for informational purposes, not meant for investing or trading advice. You can catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, Google, and I think that's all the platforms we're on. Wherever you get your podcasts, that's where you can find our show. Thanks everyone for joining us. Have a great weekend, and we will see you on Monday. Also, good luck to the U.S. women's national team today, and happy birthday, Elon Musk. Have a good one.
Oh, happy birthday, Elon Musk.